Good afternoon, everybody. Today is, what is it? It's Friday, the 22nd of October, 2010. We'll go ahead and take a look at these markets in a minute. Before I do that, happy birthday to Luke Gilner, John's son. So let's take a look here. He's 6 years old today. Anyways, the S&P 500 finished pretty much flat here today. Actually, we were up 28 cents, but when you look at the 1 minute chart and take a look at the actual action, really not much occurred here in the market today. That is at least in the S&P 500. We had a little pop at the close, but spent the whole session basically oscillating back and forth above and below the daily VWAP and right at the pivot level for the day as well. Overall for the week, though, you have to be impressed with the market action. For the week, we did finish with a slight gain. We were up, I guess, about 75 cents or so, 71 cents. And we didn't close above this resistance that we had seen earlier this week and late last week. But still, a pretty impressive action when you consider what we started out with on Tuesday morning with this gap lower in that close that put us below this 116.80 level. And 116.80 was actually a level that I thought was going to be important for the week. And we surprised a lot of people Wednesday morning with that gap higher. Really rocked the market up. But overall, it was a pretty quiet week in terms of where the S&P 500 went. But there was a lot of action, good action in the individual names. If you take a look at the daily chart here, we still have a very nice, healthy uptrend above a rising 10, 20, 50-day moving average. And we're getting a little bit of action, I guess, below that 5-day moving average every once in a while with these little shakeouts below that 5-day moving average. But that's all they've been so far is shakeouts. They're not really a real reason for concern. They haven't been something where it's not holding on or recovering very quickly, and that's what you would expect. I mean, you get below that 5-day moving average, and I talked about it a lot, and in the direction of the 5-day moving average. When you get below that 5-day moving average and it starts declining, it kind of just puts you on an intermediate term caution, I think, is the proper way to look at it. And then you look back and say, what's the bigger picture telling me? And when you look at the daily time frame, my audio, I apologize, here we go. So that should be probably better for the audio. I apologize about that. Anyways, when we take a look at the daily time frame, that is the larger time frame, after looking at where are we in relation to the 5-day moving average, what's the direction of the 5-day moving average, we then take a look at the daily time frame, and here we have a rising 10, 20, 50-day moving average. The 10's above the 20, the 20's above the 50, the 50's above the 100. We just had this golden cross today, which you don't put a lot of weight into something like that. It gets a lot of headlines, and I'm just going to back up the data a little bit because the last time we had the 50-day moving average cross the 200-day moving average was back here on July 2nd, right near the lows of that move, and we've had obviously a huge rally from that level. Let me just take a look over here and see. Looks like yes, that the audio is better, so hopefully we got that fixed. Anyways, we're in a healthy uptrend in this market. You look at the daily time frame, you look at the weekly time frame. We're making progress up towards levels where we would expect to likely encounter resistance. These are here's the next real potential for a resistance level, and that's up near 122.10. The good news this week is, I guess, that we continue to hold on a closing basis 2 weeks in a row above the recovery levels from the flash crash. So that to me is a good thing that we closed above there, and we continue to close above there. And the breadth has been pretty good. Yesterday was a choppy day. Today's breadth, we did finish with 1,775 advancing stocks and 1,173 decliners. So we've got healthy market, and it's being reflected with the stocks. If you look at some of the big stocks that reported earnings this week, for instance, Apple, it's down from the earnings report, where it closed prior to that, the all-time high, but it's still in a healthy uptrend, just kind of digesting the move a little bit. You might have experienced a little bit of, buy the rumors, sell the news in Apple, but there's nothing here that indicates that a top has been made, or that it looks like it's any kind of larger sell-off is imminent. We have a lot of levels below this market that should offer support if it does get further pullback. These highs, which are really close to the 20-day moving average as well. But Apple, it was, I guess, one of the weaker responses to earnings. We also had Google, which of course was actually last week, but this week we really held on very nicely to those gains and created this nice little pennant in here. And I mean, you look at Google, this range is tightening, and maybe next week getting above about 620 or so. That this stock could continue to see some further upside. If you look at the longer term charts, we're up at the highs. Basically, we're these highs for the year are within spitting distance, basically, and you get above that level. Well, I guess let's just draw a horizontal line, because I'm not good at drawing the straight line like that. But we get above the year highs, then we're looking at maybe making a run all the way for. I guess we got to be a little bit more conservative and maybe 650 and then off to 700. But the responses to earnings have generally been very favorable. Today we saw Chipotle Mexican Grill has just been when you think about stocks to invest in. If you look at this, I mean, this is kind of like the McDonald's of the younger generation, I guess. But they're opening these stores all over the place. They serve great food. I actually prefer Qdoba's, which is Jack in the Box, but the market prefers Chipotle. I would keep an eye on Jack in the Box maybe next week, though, because the stock does have a bullish pattern here, and maybe getting above some resistance 2380 on the intraday time frame. That's going to be what it takes to get it out of this little tight consolidation that we've seen on light volume. So would have expected maybe a little pop in there today on that, but we had big volume on this more recent little break past some resistance in Jack in the Box at 2270 area, and it now looks like the stock is in motion and maybe headed for the $25 level. Chipotle, obviously, though, is the bigger one, so that's where the money's flowing. Amazon reported, and overnight, and we had seen. Actually, I don't know if that's going to. Let me tighten that up. What do we have it on? 50 ticks. Overnight, we had seen it. I think I saw it down at 156, and a lot of times that pre-market action really, I mean, it just disappears in the at the open, and Amazon recovered very nicely from what was a pretty ugly overnight session. It was a little bit volatile in here, but then broke out to new highs. So, and are these all-time highs in Amazon? They are, right? Yeah, they definitely are. So Amazon continues to be real strong. So the point by looking at these stocks is that these are the stocks that provide leadership to this market. Baidu is up another 5 points or so today, 4.5 to 107, all-time highs as well. These are the big stocks that the institutions are involved in. IBM reported this week. Now, they had a huge run in front of earnings that was really holding that 10-day moving average very nicely, and we saw a little bit of a sell-off. It opened down at that 20-day moving average, and maybe the stock is going to need to correct a little bit through time here, but definitely a very healthy pattern in IBM. ISRG was one that, coming into earnings was, here's just another big institutional name. It was in a downtrend below the declining 10-week or 50-day moving average, the 20-week, 30-week, 40-week, etc. They reported earnings. The stock gapped down and is trying to recover, but still, kind of a little bit sketchy in there. Riverbed reported today. Riverbed was one of those stocks that got hit on EBIX a couple weeks ago, or EQIX rather, when we had the cloud computing group when they started to have their difficulties with because of EQIX, their earnings, or they warned or whatever. It brought stocks like Riverbed down, and Riverbed has recovered very nicely. It's trading on its own merits, not based on what another stock did. So we are still in earnings season, but so far, the majority of these reports are really turning out well, and it's reflecting, obviously, in the market. This market is extended. People are looking for reasons for it to sell off and to cave in. But, we're still holding above key levels of prior resistance. And when you look at, let's look at a 65-minute time frame. This has been just a really nice, healthy pattern of higher highs and higher lows, where this market has been stair-stepping higher. We get a little shakeout below support, which scares some people, brings in some new shorts, and sends money to the sidelines for a minute. But then people come back in and they chase the market, and that will continue to be the dominant theme. That the dips are to be bought as long as we remain. And here on this chart, this 65-minute chart, we're looking at a 5-day moving average, a 10-day moving average, and a 20-day moving average. And I mean, even right here, we haven't even seen a 5-day and 10-day moving average crossover, which would represent indecision like we saw over here before the market broke resistance and the buyers really took back control in early September. So again, healthy market. NASDAQ obviously is up at levels that haven't been seen since late 2007. So we're at these. We'd broken the 2008 and 2009 highs, and here we are at these 2007 levels, and looking like the next objective is probably near 5260 as far as key support levels and that sort of thing. We're doing the same thing in here. We're rising. We've got, you can draw a trend line here, but the fact is we've got these higher lows, and we're banging away at this resistance. Looks like it's getting ready. It's building energy for another pop higher here. Is really what the NASDAQ looks like. So as long as we can continue to hold, next week probably $50.50 on the NASDAQ. In the S&P, I would say 115.5 to 116 is going to be the bigger level if we do get some kind of pullback. 115 to 160 is where we ought to encounter the bigger support. Russell 2000 was it's kind of flat in here today, but on the week it was up 3 cents. The NASDAQ for the week, by the way, was up about 20 cents, 15 cents. But it's acting healthy. We've seen support at the rising 10-day moving average. Now we're seeing this 20-day moving average act as support. The prior bigger resistance at 68 has obviously held and then some, and we're working away at the post-flash crash highs in the Russell. Haven't been able to close above them, but when we do, I think you've got a quick move up towards the next area, which was this prior support back in April, which did become resistance in May. And I think going forward next week, key support in here, probably at about $68.80 to $69 in the Russell 2000 for the semiconductors. We've been talking about this group as being a nice, healthy consolidation above this rising 20-day moving average, and just below this bigger level of resistance at $29 a share. So intermediate term, what we had seen today was a little bit of a break of this 28.50 level. We're right on it. So this 28.50 has been a little bit of resistance here over the last 2 weeks. We broke it. It looks like we're holding for now. And what I'd really like to see, and this is what I'd like to see, but is maybe a slow creep up towards 29, maybe a little bit of a pullback to 28.80, and then we punch it through this $29 level, and semiconductors could provide the fuel to the upside to get it. The semis could get up north of $30 a share, and the financials are, as I wrote the other night, the thorn in the side of the bulls. People say, oh, the market can't rally without the financials. Bullshit. Look at what they're doing. They're up huge. I mean, this market's up great. You can rally without the financials, and that's the great news. But if the market, if the financials break below 1420, I think that would be the catalyst for some kind of maybe a little bit more significant selling than what we've seen in the SPY and the Qs. But for now, the financials simply do not matter. They're just being ignored. You can argue about them all you want as far as what they mean to our economy and all that sort of thing. But if you focus on price action, they're actually, here's the group that I think it was Lee that said, Lee Drogan that is, that said, a lot of people are looking for the financials to be the reason that this rally ends. The financials could be the reason that the market really just kicks it into high gear towards the end of the year, and we really see more powerful uptrend develop. The path of least resistance is higher. It's innocent until proven guilty. If these financials could participate and break out above $15 a share, well, then there'd really be no arguments price-wise in this market to remain bearish. And this could actually not be the reason. I mean, there's still the possibility, yeah, that they break 1420. We want to become very defensive. But if they break past that 15 and a dime and hold, then the people who've been talking really bearishly about the financials and positioned bearishly could get squeezed pretty good. You look at how the market held up with Bank of America just acting like garbage, like with Wells Fargo. Wells Fargo was breaking down, but look how Wells Fargo nicely recovered as well. Wells Fargo had a lot of bad news. But the shorts are getting squeezed in there. What about J.P. Morgan? J.P. Morgan reported earnings back here about a week ago. This one, not looking too good. I mean, we've got a declining 10, 20, and 50-day moving average. But when we go to just the bigger picture, the financials by themselves, we've got a neutral market here. So really, I'm not making a bullish case for them. I'm presenting a possible bullish scenario that could develop if the financials get going. However, they're still in this range, really 1350 to 15, and the point that would really give us reason to become defensive would be if we break below 1420. But if the market does the unexpected, and I think that if you took a poll, most people would say that the financials are going to break down, not to the upside. If they did the unexpected, that could be some pretty good catalyst for the upside in this market. The IYR, as I said the other day, up at recovery highs since the 2009 lows. They're coming into an area of potential resistance, but prior support tends to act as resistance. There's nothing written in stone that says they will halt or have to halt here. They're still very healthy looking, so no reason to look for the top there. No reason to look for the top in gold. Gold, it had a huge run. To call this a top, though, or a blow-off top or whatever, there's no evidence of that. Let's let it settle in. I mean, you don't want to make new purchases while it's below a declining 5-day moving average, but there's no evidence that it's a longer-term top in here. We've got the potential for some bigger support down near 123, 125 at that 50-day moving average, but it's not. There's no evidence that it's dropping. So anyway, let me take a look over here. That was pretty much kind of what I had on my agenda to cover. I have some subscribers in my chat room that want to take a look at some stocks, and I'm going to look at them before I get to the Twitter ones. And first up, we've got Tibco Software. Tibco's in a great uptrend here. It's just a fantastic move on this weekly chart. The daily time frame, all time frames are pointing higher. It is clearly innocent until proven guilty. I would say that in a stock like TIBX, where you have it on these longer term charts, really looking bullish. And even when we look at this monthly time frame, we've cleared resistance from a decade ago, basically. And you look at things such as this. Okay, there's a short position of 10.3 million shares in Tibco. Back in April, there was 5.5. So just fresh, as far as a fresh short position goes, we can look at this and say, since April, the shorts have added basically 5 million shares. Let's see how they're doing. Well, the average price since April, if we take a look at a volume-weighted average price line, since April, is down here at about 13.75. So I'd say they're not doing too good. It wouldn't feel good to be short 10.3 million shares of this stock, and someone's getting hurt badly in it. The only thing I would say about Tibco is, be aware of when the earnings report is due out, because this is the type of stock that if the bears have it right, and their timing is obviously sucks here, but if they have some kind of little piece of information that gives them justification for holding this position so badly against them, it's the type of stock that maybe could gap down to $14 a share. What was it? INFN was looking good earlier this week, and if we look at this one, it had a nice looking chart. They reported earnings, and it just got smashed. So, be aware of earnings basically is the main point there. So, in INFN, let's take a look at this. If you take a look at Infineon, it was looking like a nice longer term chart here that was breaking out. Now, it got smashed on earnings, and sometimes the shorts have the story right, but the market doesn't recognize that. And for Infineon, they added to their position. They nearly doubled it over the last month and a half, and those were the guys in here this week that got it right, obviously, in there. So TIBCO, I'd just be aware of when our earnings due out, I guess, more than anything. Let's see. How about a look at Teradyne? Teradyne, the semiconductors are strong, so there's no reason to think a stock like Teradyne wouldn't be as well. But Teradyne is, I lost my trend tool here, so that means that I can't draw a normal line here. It just turns it into a volume-weighted average price. Oh, there it is down here. Okay, cool. Let me do that again. Let me just go to a regular line. So we've got a little bit of resistance, it looks like, in this area. Teradyne is just Christian actually had a stock today. I forgot the symbol, but I was looking at it going, it looks like a boring stock, so I didn't get involved. That's the way Teradyne looks to me as well. It looks like a boring stock. But his other boring stock, I hope he's going to remind me here, took off and went like 6%. There it goes. It's RGS. Here's a stock that I thought looked like a boring stock, and it took off. I mean, he told me about it here late in the day, right around this area, and I was like, I don't know. It's it's up at R2. Doesn't look like anything special to me, but obviously, it took off and it was a nice trade in it. But back to Teradyne. Teradyne to me looks like a boring stock, but above some resistance in this area. This is the type of stock that's going to run with the semiconductor index. You get that semiconductor index above 29 in particular, and this might be the type of stock. I don't know what their weighting is in the SMH, but it's broken a downtrend. It's above a rising 10, 20, 50-day moving average. It's also above the 200-day moving average. So the buyers are in control. It just looks like a slower type of stock. I think that if you were involved with a stop down near about 1105 worst case scenario, and that's really not much risk below this recent support, that nice little consolidation in here late in the day. I think on Monday you could even buy it above 1155 with a stop if you wanted to be real aggressive near about $11.40 a share. So Teradyne looks good. It's is it right for your personality? It's probably not for mine, but maybe I'll look at it and he'll convince me to get involved next week. How about Creighton Performance Polymers? Can't say I've ever heard of KRA before, but it trades 494,000 shares a day. It's got a nice looking daily and weekly chart. It's the thing about this one is that where does it come from? Where does it have the potential to go? We don't know where it has the potential to go, but it's had these moves higher. And do you want to buy them after the move higher, or after it's had a chance to consolidate? That's the one thing I see on this weekly chart is we've had this 4-week rally that's gone pretty much unchecked. Last time we had a big 4-week rally or even a 3-week rally, we get at least a time correction, if not a pullback correction. But back to the daily time frame, it's stair-stepping higher. It's making these higher highs and higher lows. So this market, it's been the stock has been riding this 5-day moving averages beautifully, and a real nice pattern of higher highs and higher lows. So I would choose maybe this level here below 32.30 or so. Breaking below that level, then I would think that maybe you want to lock in some profits. I don't think you really want to be purchasing this stock here after the move from 26 to 34 here over the last, so 8 points on a $26 stock was at about 30% over the last couple of weeks. To me, that's kind of chasing. However, if you're tight with your money management, then maybe you can buy it above 34 with a stop near 33 if that's what you're looking for. But has it, is it going to run out of some energy to the upside? Otherwise, it's in a very nice uptrend. And that's the key to focus on. How about Domino's Pizza, DPZ? The restaurant stocks are strong. Domino's Pizza broke some resistance here a couple weeks ago, kind of started grinding higher. Then I think they had earnings earlier in the week. It dropped back down, or it was intraday it did that actually. What was that? I think we were, Tuesday, yeah. Tuesday, it was having a good day. It dropped back down and recovered nicely at the end of the day. So since the earnings report, here's a 4-day chart using, what are these, 4-minute candles, I guess. But these are the last 4 days. the volume weighted average price of the last 4 days is right here. So since the earnings report, it's basically, the buyers are remaining in control here. We're right at VWAP, and maybe getting above this level with a stop down here. So this prior resistance acting as support. Again, the restaurant stocks are strong. It looks like it should be able to make a challenge of the highs earlier in the year at about 16.5, and up through that level. If you back it up on the weekly time frame, especially in light of the big volume it saw this week, then maybe we're going to get it up through that 16.5 level and up towards 17, 18 bucks. But a lot of these, Ruby Tuesday, real nice pattern in here as well. Here's another restaurant stock. Great looking longer term chart. Denny's, I don't know. Denny's looks like it could get going out of this consolidation. Wendy's went a little bit today, and Wendy's was a nice light volume pullback to prior resistance, which became support above a rising 10, 20, 50-day moving average. So, Chipotle, Jack in the Box, I think like Panera Bread, I think I saw that one up big today. So these restaurant stocks, they're hot. What is that? Does that tell us something about the economy? I'm not an economist. I don't really look at that stuff. But is the casual diner back? As they would say on CNBC or something like that. Is the casual diner back, and people are going out to dinner more often? And it's, is this one of the areas of hope for our economy, where the market is a leading indicator of the economy, not the other way around? CIM. Patrick wants to take a look at CIM. This one, it's a goofy little stock, meaning that it just kind of grinds higher. I don't know what they are. They're an investment trust. Let me type it in over here so we can get all the time frames to populate. But CMI, broke, where is it? 420, I guess, or 421. It's just a weird little stock here on the weekly time frame. It's just been grinding higher from 2.5. It doesn't look like it makes a real, nice sustained type of move that could really continue. It does look bullish. Something happened back here. Maybe it's headed back towards $6 a share, and it broke this resistance. So CIM looks bullish. It broke this resistance. Let's see if it can hold on as support early next week. We're now in this short-term pattern of lower highs and lower lows. So let's see if it can settle in, find some support. Kind of similar to Wendy's did. So this would be similar to Wendy's maybe on this day right here. Okay, so if you look at Wendy's, I guess that was on Monday of this week. If this CIM is going to behave properly, then maybe another day and a half of pullback, a day of sideways consolidation, and then this stock could be a nice one on CIM. How about a look at Garmin, GRMN, and let's take a look here. Garmin has been making a nicer base in here. A lot of people were short this stock earlier this year, and you look at it on the weekly time frame, we're right at the declining 30 and the 40-week moving average. We're at this bigger prior level of support. Support broken led to a big decline, and now potential resistance. So I don't like it based on that. Let's just look at the daily time frame and see if we can get a better feel for that. So you can see here that we had a head and shoulders pattern that kind of played out. Now we have what really actually looks like an inverted head and shoulders pattern. So why do we get these head and shoulders and inverse head and shoulders patterns? Well, the stock is going down, lower highs and lower lows, and then the buyers regain control. The 50-day moving average flattens out and starts to turn higher. Now we've got, I don't like it because we've got that 200-day moving average here and this bigger level. And what we could do is actually take a look at the volume-weighted average price since the beginning of the year. So since the beginning of the year, you can see, just by drawing this across, the average price is right up here near about, where did the trend tool go? Damn it, I lost it again. Anyways, it's right around this, I guess probably about 32.5 area, 33. So not thrilled about Garmin, but it acts decent on a shorter term basis. Maybe a stop below this little level would give you an opportunity to get involved. In the 10-minute time frame, it's above this rising 5-day moving average, and it looks like it's got some momentum. So maybe it continues up towards 33, which is still a point away. But generally, I think there's better stocks out there, and there's a lot of, in this market that we're seeing so many stocks that are in good, healthy uptrends that we don't need to take the marginal setups. If we were looking at this stock 3-4 months ago, when the SPY was not behaving as well, when we were over in here, then we want to take a look at that type of more marginal setup, because those are the best opportunities probably that we have. But it's it's just not it's not the best, but it's not a bad one either. Anyway, let's take a look at Ziffinger wanted me to take a look at IBM. I did mention IBM. I think IBM needs to consolidate probably through some time here, and maybe even through some a little bit further price pullback. Now let's see, who was this earlier? Let me just make sure I got this straight. Fibline, thanks for the retweet. Phil, obviously, as well. Phil does, I believe it's Wednesday nights. He does his Market Shrinkology, which is an awesome show. If you don't catch that, check it on the Star Twits archives. But Bionic Trades wants me to take a look at Travelzoo. Travelzoo is a thinly traded stock, but it broke out yesterday and continued higher today, up 8%. So it's getting, I think, a little bit extended to chase it. It has a big short position. Let's take a look at that short position in here. Let's take a look at TZOO. So yeah, well, actually, it's not that big of a short position. 1 million shares. Days to cover, 4 days. It's not really a big short position, but it's a thinly traded stock. 252,000 shares. It's been up on real big volume the last 2 days. I think you need to see Travelzoo pull back. I definitely wouldn't be a chaser of it here. Anyways, hey, thanks for tuning in, everybody. It's thanks for taking some time out of your day. If you're viewing it on the recording. Have a good weekend, and I will talk to you again here live next Wednesday. Thank you.